This is a challenge for us because this is afternoon of the second day and you've been absorbing a lot over the past 2 days, so you may be tired. So it's going to be a challenge for us to perhaps wake you up or to cheer you up. So we'll see. And I hope we'll be doing a good job also warming up the room to introduce Clark, who will have the final word for this conference. No, more seriously, the biggest challenge is maybe to really tell you about the appraiser's job, what helicopter values are all about, because we've been hearing during the past 2 days, especially this morning with this Slido question asking you, do appraisals reflect reality? And the majority of you said no. So we're going to be trying to explain that in fact appraisals do represent reality, and we'll try to demonstrate this. Just to introduce myself, I'm Gérard Deterne from Airbus. I'm a certified appraiser, but of course doing appraisal just in-house within Airbus. So I'm pleased to moderate this panel today. I'd like my fellow panelists to introduce themselves, and maybe if you can say a few words about yourself and the sort of appraisals you do very briefly. Want to start with Usman?
Yes, so Usman Ahmed, I'm with the AIRCORE. So AIRCORE is a full sort of life cycle consultancy advisory. We do a lot of appraisal work within the helicopter, but also on the fixed wing side and the engines and parts inventory, flight sims. We also do a lot of finance and leasing advisory, structured transactions, and also help out in the engine teardown market, end-of-life solutions.
My name is Kmiecik. I'm with HeliValue. We are the official helicopter blue book, as well as a helicopter appraisal company. We handle pretty much any type of helicopter valuation there is, residuals, anything.
My name is Sara Dhariwal. I work for Ascend by Cirium. We do business jet, commercial fixed wing and helicopter appraisals. I specialize in the helicopter part. We also have database offerings telling you most things about all helicopters in the market.
Hi there, good afternoon. My name is Alastair Fallon. I work with IBA Group. IBA Group it's been around for about 30 years. It's growing and it covers all sort of aspects of aviation. One of my colleagues is here. He can tell you a little more if you wish. Faisal, sitting down there. I'm an aviation analyst and I specialise in helicopters. So I look at rotary wing. I leave everybody else to do fixed wing, etc. So yeah, anything you want to know about helicopters, we'll try and do for you. Obviously, appraised values is where I start.
Sorry, I got the broken one? Oh, no, that's me. Max Buirski with Asian Sky Group. We are a business and general aviation consulting and advisory firm. We also do brokerage. So our valuation work looks at it from a purely commercial perspective. Everything that we do is based around a transaction or advising a buyer or seller around a portfolio acquisition or some kind of commercial transaction.
So that's interesting, Max, because you are involved in brokerage, but you're not a certified appraiser in the American Society.
I am not a certified appraiser.
In that sense.
I just play one at conferences.
But that's interesting because you can give us your views on what's the reality of the market. Now, what we wanted to do is really to tell you about the rules of helicopter values. That's the title of the panel. If you can show the agenda of the day of the panel, would like to review with you and to recall the main rules of helicopter valuation, and then we'll try to discuss how was it like 5-6 years ago when the market was booming, and how it is today as far as appraisals are concerned. and maybe to really get deep into maybe a bit more details about appraisal methodology, because often some of you ask, how do they come up with these figures? How do they do that? So would like to address that. Now, main rules of helicopter valuation. Would you like to comment, either of you, some of those rules? And we could do like the do's or the don'ts of helicopter appraisals. What are the major principles that need to be really highlighted for the community to understand exactly what helicopter valuation is all about?
I can start. So I think, to put it very simply, valuation is a process. So think of a storytelling. So in this, you have characters, and one of the characters is the helicopter that you're looking at. So when you are appraising a helicopter, you have to tell the story, starting from the objective, the purpose, the use, the helicopter, its condition, who are the people involved, what will be the use of the helicopter, the condition of the helicopter. So all of those things need to be considered when you are valuing a helicopter, whether it's a fleet appraisal or whether it's a single individual helicopter. And I think without knowing what the uses are, without knowing what the purpose is, whether it's being used for financial statements, whether it's an insurance replacement for the purpose of mortgage, or whether it's just a fair market value. Someone can ask you to provide a fair market value where the actual transaction is forced liquidation. So your fair market value in that instance will not be applicable. So it's, appraisers need to think of this as if you are telling a really well-structured story about the helicopter and understanding that market. So understanding all of the characters that are linked with that helicopter.
So the purpose of the appraisal.
Purpose.
Very important. You want to?
Yeah, to stem off of that, without knowing all the information that we need for the scope of work of the assignments, we're not going to give you the results that you need. So it's very important to have all the information up front for the exact purpose, like he was saying, but to also know what the outcome is going to be in the end of, what they're using it for and how they're going to use it, and what type of values are being requested. So it's very important. Actually, I had one more thing, kind of to deviate a little bit here. It's been said a couple times today about the appraisers and the values. The values are so far off of reality, and without getting myself in trouble here, I wanted to say that what you request is what you're going to get. So if you're looking for reality, ask for reality. If you're looking to boost your portfolio numbers for your investors, that's what you're going to get. So it all depends on how the appraisal is being requested and what you expect in return for the appraised values. So there's a lot of misconception of the appraisers, but it's also the request that's coming through for who it might be to what type of values you're actually going to get in the end.
Can I add to that?
Yes, if I may. Yesterday, Sharon was telling us about borrowers' need to go through impairment tests. And in that exercise, they need market estimates of their assets. And maybe you may want to come back on that, if you don't mind, because impairment test is one purpose, but there are others. So it's very important to make a clear distinction between these different purposes.
I was going to first clarify that the values won't change depending on what you need it for, but the type of valuation might change. But what I was going to highlight was the onus on us as appraisers to perhaps be a little bit more transparent with you as the market. I think it's very, very important to state the limitations of any valuation that you do, and that's why the valuation reports is absolutely imperative to the numbers. You need to read it, as an investor, you need to read it. As a buyer, as a seller, you need to read it, because sometimes we simply don't get all of the information that is required for a particular valuation, and we state all of those limitations in the report. And I think that's quite an important responsibility that we have as an appraiser community for you to more easily understand what you're looking at.
Yeah, I think I can just add to what's already been said, but probably not much. But I think you start off by having that relationship with your client, with the people of the group that wish to have their asset. So in this case, the helicopter valued. So you need to find out exactly what they are looking for, and then in return, there's certain requirements you have before you can carry out your appraised valuation. So you have to have that information flowing, and you have to have those channels open for you to carry out that valuation and to do it correctly as required.
Max, I suppose in your activity, you gear towards trading helicopters, selling, buying, helping customers and buyers, sellers to trade aircraft. So I think the purpose of the appraisals you need is really clear. You want to comment on that?
Yeah, I think appraisals for a group like ours comes into play when you have a client, you have somebody that wants to sell an asset, whether it's a helicopter or another asset. They're probably going to have an appraisal that they got, and whether that was for their insurance, whether it was for their bank, whether it was for whatever purpose. And I think all the appraisers do a good job of providing that. Where it becomes an issue is now when someone thinks that their helicopter is worth exactly what it was appraised for, they want to put it on the market at that same price, and that's where it's up to brokers, groups like ours, to say to them, well, yes, the appraisal value, and it may be legitimate, is $10 million, but if you want to sell in the next 30 days, next 60 days, your price might be $8 million. And really that's where we come at it, is really getting people from understanding the appraised value to sort of today's trading value.
I think can I just add to that, because the appraised value is value at the time that you do it, so it's going to change again after that. And if somebody is in the case of, I've got this appraised value and I am considering selling, I want to sell within the next X number of days or weeks or months, then it's a fairly fluid sort of market, and they might not get exactly bang on that price, but so they've got to start.
You're right. One of the do's is really to specify the timing of the appraisal, because whatever value that you're going to address or that you're going to request is based in a certain timing environment. So that has to be clearly specified, because the day after, if something major happens on the market, that value may change. So whatever figure comes to you on your desk when you do whatever you have to do, the timing of that value must be clearly specified.
I think what I wanted to comment, just to follow up what Max was saying, it's very important that the clients understand, whether it's a lessor or a bank or an operator, they understand the limitations and the assumptions that are given in the appraisal. And there are a lot of those assumptions included with any standard appraisals. I've reviewed appraisals where the helicopter is on no program, and the assumptions are, it seems that they were copied from a previous template, and the assumptions were that it's on a PBH or some kind of a PBH program. So it's very important that when you receive that appraisal, you review all of those assumptions and limitations and understand those. And if there's anything that you don't understand, you have the right to go back to the appraiser and ask those questions. What does that mean? How does that work out? And then going back to when I was saying telling the story, I think it also works when you are putting a value to an asset. The number that you come up with, there should be a story behind that number. That number should not come from an index or a button pressed and suddenly a number comes out and that's the number that you use. There should be a story behind all of the data that you are using in your modeling. There should be a story behind a range of numbers that you're giving or a number that you're giving. There should be a clear approach. There should be, whether you're using income approach or sales or cost, all of those should be stated. And your conclusion, that why are you going with a specific methodology.
You're addressing this notion of generic values that can be found of some of your website for your customers, half-life or full life value of a particular helicopter type. But when it comes down to evaluating a particular serial number, this is where the whole story comes into play, right? And the two must not be mixed.
You also got to pay attention to the timing of the appraisal. There's two different sections there should be timing. One is the timing of the validity of the appraisal, as well as the marketing period of the value. So if you have a appraisal with a marketing period of 12 months, don't expect to get that sale price tomorrow for that aircraft. So if you're looking for something today, then ask for, an effectiveness of today, with a marketing period of 5 days or whatever. But if you're looking for something what you can achieve over 12 months, then make that noted as well.
Now, let's try to maybe to discuss what was the appraiser's job like 5-6 years ago when the market was booming and what it is today. And so apparently some of the community seems to think that appraisals do not reflect reality at the time. Can we discuss this, and could you comment about if the assumptions, the appraisal assumptions have changed lately compared to 6 years ago? Would you like to comment on that? By the way, I wanted to ask you, take your smartphone and go on Slido, and we have a couple of questions for you, and we'd like to have your opinion. And actually, one of the first Slido question is related to one of these assumptions. And while you are trying to respond to this question, then we can discuss the assumptions. But before we can, you want to comment about
Yeah, I can start. So I think I will go back to what Ed said in one of the earlier panels, and it's, if you go back 5, 6, 7 years ago, the market was doing well. And we did a lot of work going back 6, 7 years and doing research on what people were saying at the time, all the research houses and the analysts and the lessors and the banks. And at the time, no one had actually predicted what happened later on within the oil and gas market. So I think what everyone should understand is appraisal is effective as of the date when the assets are appraised. So at the time, the appraiser's view was this asset is worth this much. Problem comes when you start forecasting, and the forecasting is also based on the conditions, the environment at the time, on the date of the appraisal. It's not based on, we would think in 10 years' time, these values will still be the same. An asset has to depreciate, right? And the appraiser has to make assumptions based on all of the historic data that they have in front of them, the market conditions, the segment, bring in all of the risks, the inflation, and look at the age and what may be replacing that asset in 5 to 10 years' time. And on the basis of all of the data or all of the information that they have available, they make those assumptions and they make those forecasts. And I think at the time what appraisers were saying was in their view, or in our view, was the right kind of number. Now, the market can change literally the day after. Right, and when that changes, the assets, rightly, they start to depreciate. Demand and supply issues coming from the oil and gas market. So it's going back to my point, which I said that we looked at it and we could not see anyone who had actually predicted that this will happen in the market. I think the other problem that we have is we've seen this within the fixed wing market. The fixed wing market has gone through these cycles. And since the lessor phenomena, where the lessors have entered into into this market, this was the first time that everyone was going through this. So very few people knew how to deal with this, including the appraisers. And I think all of us are probably much better prepared going forward if there are any other down cycles, or to be able to predict, or to be, to model some of those downturns. So yes, it has changed. Whatever it was 5 years ago, it's, we're not under any illusion that it's the same. It is different.
Yeah, I was going to. No, actually, he wound up saying partly what I was going to say, which is that, the appraisers have taken a lot of heat, I think, over the last 2 days. But when I got started in this business, in the asset business 20 years ago, we were into supply boats. We were into drilling rigs, tankers, asset classes that were heavily affected by oil and gas and that were extremely volatile. And we went through a lot of cycles. But the helicopter sector, for a number of reasons, was never had the same kind of volatility, I think, as you had with like a drilling rig. And you didn't have the lessor community there. And so really, leading up to those 2010, 11, 12, when the market was really taking off, there was still a prevailing theory, I think, among everyone that, well, helicopters are different than other assets, or that, their components, everything gets replaced through the life of the asset. And because it never had that volatility, I don't think the appraisal community maybe had that sort of background in saying, well, these oil spikes, they always crash and they always end in misery. So I do think we need to give them a little bit of a break on that.
Sara? Yeah.
I completely agree with what you both said, but I think for myself, the fundamental shift from 5 years ago is that 5 years ago this market was more open. Everybody was more ready and willing to share information that would make a difference to the transactions in the aircraft we looked at. OEMs share their information more willingly than they do today. And I think it's important for everybody to recognise that we're not here to set values. That's not what we do. We don't lead values. We're here to reflect the market. If we have very little to reflect, then values and numbers that we all put out in the market are going to be a little bit skewed because they're based on the information that we have to hand. So again, and I do this all the time, I know that, but I'd like to encourage everybody to speak to their appraisers a little bit more. Everything you say, and I can only speak for myself at this end, is kept completely confidential, is put into our analytical tools that we then use to break down and make sure that we analyse apples to apples, as it were, because an offshore machine by nature is going to be more expensive than a utility machine, mainly because of the equipment that are on that aircraft. You've got PBH that we've talked a lot about in the past year, and the PBH arrangements do differ. So maybe PBH is not a proxy for full life anymore. These are the kind of things that we as appraisers need to have access to and understand in order for our values to be absolutely reflecting the market.
With respect to underlying assumptions, do you want to comment the results of this poll with respect to the useful economic life of assets? It is true that, knowing Airbus products, I can tell you that Super Pumas were used for more than 30 years. 332s have been flying and operating and generating revenues for more than 30 years. Bristow people could confirm. But it seems that from the audience is that it's less within the range of 15 to 20 years. Is that nowadays the rationale, or is it valid for all aircraft type? Alastair?
No, I don't think it's not valid for absolutely everything, and I don't think it's even valid for any one in particular. I think the focus might happen to be on the primary role. So the helicopter comes offline, comes into service, and it's specifically designed to serve in one particular sector. That first line that everybody's gone for, it's just pretty good. You put a bang on the button. Primary role can sometimes come to an end within those years, but if the helicopter is designed and prepared properly, then with limited cost and limited downtime, it can be, it can be restripped for a secondary role. And fingers crossed there is room in the market for that. So the helicopter doesn't end, it doesn't die a death, it moves aside, and it can certainly fulfill a very practical role somewhere else. I think we are seeing that. I'll go back and I'll go to Super Puma once more. They've been particularly successful. I think from what I gather, there's about probably greater than 50% of the North Sea offshore fleet have been repositioned. That's the latest I've heard, but please ask Gérard for confirmation.
I think there's way too many variables to come up with any set, defined age. Every aircraft is different. As you've seen with, for example, an MD-902, that was a short-lived aircraft just because of issues it had and support it had. Take a look at the MD-600N. I'm not picking on MD here, but that had issues and that ended. And now you're taking a look at the S-76s. Take the 76C plus came out, I believe, 2008. And now we're getting to a point where aircraft are being parted out because there's nobody wants to buy another one to put back into offshore. Now there's regulations coming out that's going to pull that out to be competitive in the marketplace for offshore. There's still places for it to go for VIP, but you got to have a very low time machine, and you can achieve a $3 million price tag still today. But there's too many variables to say anything. I mean, we've got aircraft flying from the 60s that are still the most desired machines out there in the utility sector.
Yeah, sorry, just one thing I would think. I think the question should probably be what's a useful first life? And I think where that really comes into play for people in this room is if you're buying an asset, if you're financing an asset, if you're leasing an asset, and it's a new asset, you've got to look at that amortization schedule on that 10 to 15 year time horizon because technology changes quickly. And that second life, while it may be productive and it may last a long time, if you bought a Bell for 25 years ago for offshore oil and gas, and today it's being used in firefighting in Australia, it's two completely different economic propositions. So if you're looking at it from an amortization perspective, an investment perspective, I do think today you've got to keep the depreciation period short.
Sara?
I think we're talking about two different things. One is useful economic life, which is indeed what you use to model your investment on. The other is operational life. Operational life, we all know we have aircraft. Somebody was mentioning yesterday, was it ITC Leasing that had they're still actively leasing out an aircraft from 1978, I believe. So they can keep on going. But the useful economic life is very different. It's what you model your investment on, and you wouldn't really model it on when it goes into firefighting if that's what you decide to do. At the SEND, we still have a 30-year useful economic life. We think that that's perhaps a bit long, and we're modelling right now to see if that stacks up. It is a little bit difficult, but we have seen this year two, or at least one S92 at the tender age of 13 having to been retired. That's a 13-year-old aircraft. If you compare that to the early models 332, I think the first retirement as such that we saw, a part-out retirement, not going to come back, was just under 32 years old. So that's a big shift.
Can we address, just to move on, the market most influential factor with respect to values, and maybe the audience, you can give your opinion. We had like four, just 4 examples of influential factors. Which one would be the most influential? Any comment on today versus, let's say 5-6 years ago? Today, what are the most influential factors for helicopter values?
I think in this I agree with the audience. The demand and supply is definitely the most influential factor, because when you are appraising a helicopter, that's the first thing that you take into account. Any sort of analysis that you're doing in terms of valuation, then you start considering other elements such as age, maintenance condition, the functional or economic obsolescence, the depreciation of the asset. So yeah, no, there's not much more to say. I agree that it is the main factor.
Yeah, the audience seems to agree. So nowadays, we've seen heavy super mediums. We do have market values, and some of you are able to figure out market values, fly full life, but yet we don't observe any transactions, or hardly any transactions. How do you figure this out?
There's transactions out there, you just got to know how to get them. There's, like, for example, for us, on the S92 situation, there has been market transactions out there, very confidential. Nobody's going to really know about them. We will never publish 92 values again in our blue book, because the dynamics of valuing that asset nowadays with the current market, as well as the 30-year limited life on it, throws a monkey wrench into everything valuing that aircraft. But there is information out there. You just got to know how to get it.
Yeah, I think if you're really looking for real values, there is some information out there that people can get, but the other thing that you have to do is, if you're talking about a 225 and nobody knows what it's worth, you've got to go to people that operate in the utility space, you've got to go to people who operate in emerging markets and effectively ask them, would you take this aircraft? Would you plug it into your operation if the price was 7 million, 5 million, 3 million? And if you go through that economic model with them, you will get from utility operators and others, well, yeah, if I could get that for 3 million, and if I could fly it here, and I had a typical forestry contract, et cetera, I had the pilots and the engineers, $3-4 million might be a good investment. So, you may not be able to get actual transaction data, but you can kind of suss out where operators might like to take an asset.
By the way, there was the question, can lease rates substitute market transactions? Can lease rates give an idea of the market value of an asset? Because lease rates is going to be able to generate revenues for the owner, so generating revenues that could lead to the income approach, and that could give an idea of what the asset is really worth. Would you agree with that?
So I think in a market where you're not seeing, I agree with Jason's comment, you just need to know where to get the information from. There are transactions, but where there are not the same scale of number of transactions which you were used to for your database, for your modeling, there are lease rates, and those are a reflection of the market. And I think in the current market, you have to take that as a data point and sort of work backwards from the lease rate to the value, because to LCI, to Milestone, to Macquarie, a 139 or an S92 has more value which is out there on a lease rate and on a contract to someone who has an S92 or 139 which is not earning any revenue. Those are two different machines just by way of what they're doing in the market. And if the data point is a lease rate, you can work backwards to get to a number where it's probably more reflective of the market than rather than having nothing.
You had since I want to switch to the audience question, but just a final comment.
You got to be careful with that, because you got to look at it two different ways. If there's no transactions, or if there is transactions and you're using income on leases or whatever you're using, the definition of value is completely different. It is not a fair market value at that point if you're considering the income revenue stream of that asset. So you got to be careful when you're looking at that and the values that we're talking about.
I very much think the lease rate is another important indicator for the market, and we see that in fixed wing as well. Having access to lease rate and lease rate model would be great help in understanding where the values are going, where they should be. It is another indication of the health of the market, which is I personally believe we need that in the market.
sorry, one more thing.
Okay, one more thing.
In today's industry, in today's markets, lease rates have fallen very far away from market values. 10 years ago, market values were very close to what lease rates were being put out at. Today, there's no comparison. Well, I would probably say smaller aircraft have a much closer comparison than larger aircraft do.
Now, let's take some of the audience questions that we got through Slido. If the reality of appraisals is in question, what are the risks of organizations getting appraisals from multiple sources until they get the answer they want?
Okay, to further expand on what I said, I forgot to say the other part of it. So you've got client X who is, and I'm not saying who's doing what or anything, but you'll have client X who's going to an appraisal company asking for a portfolio review, which knows they're going to get higher values from that appraiser. Then they're in the same situation to where, oh, now they got to move an asset, they got to get it out of the portfolio and sell it. They have to go to appraiser B now because they know they're going to get the lower market of what's reality versus the inflated portfolio numbers. So you got to be, it's tricky, but it's it happens. It happens a lot.
So still, I mean, the purpose of the appraisal, the clients would have to specify exactly what is the intent.
True, but on the other hand, you also have to pay attention to the... Talk too much.
They don't want you to talk.
Can you hear me? No. Standards and appraisal societies. You also got to pay attention to the differences. We are not all the same up here. Every appraisal company is different in their own ways. We follow a different set of rules and standards, and they're not, everybody up here also gathers different information. Yeah. Not everybody has the same sources, the same data points, so you're not going to have the same values no matter what you get.
Next.
No, I have to add, yes, the values, they might be fractionally different, but we're all sort of getting in there about the same mark. That's the idea, and that's certainly the intention. We're not sort of looking at anything different. Yeah.
It's opinion, right?
But yep, it is opinion. It's opinion from the sources we've got in the backing we've got. So we're not making anything up.
Okay, the currency issue. If we address light twins, does any of you value light twins in euro? For example, if we're talking about aircraft that are specifically, well in demand in Europe, for example?
From a sense point of view, we have taken the decision that we're not currency exchange experts, so it's not an area that we want to get into. We value everything in dollars. It gives us the advantage of being able to compare values year on year without taking exchange rate fluctuations into account and thereby likely distorting the outcome.
It's not commonly done, but if you request it, it can be done.
Likewise, I think we have the same policy. I think there are, especially within Europe and in Euro, there are enough transactions or data points to come up with an opinion if you would like Euro value. And I don't think that the currency fluctuations between US dollar and Euro has been too volatile to be able to say that the risk cannot be accounted for.
Okay, next, is there a gap variance analysis indicator for a given model with all historical appraisals and actual transaction values recorded to act as a reference tool? Any comment on that?
So I would request clarification on that question because it's not coming out very. So whoever it is, if they want to elaborate more on this.
Forecast accuracy analysis, is that what
is there a possibility to get clarification on that one?
Kind of back testing.
I mean, if if whoever is asking this question, if they mean that if there's some kind of internal sense check that we have or the industry has of looking at what was forecasted and what it is actually as of now. And I think we do that all the time, and we get asked that question all the time as well. We work with a lot of lessors and the banks, and some of the questions we get asked is, can you go back in time and tell us what did you value this machine 10 years ago and what was your residual value? And if you have to do that now, what's the value in comparison? So, and I think there are, most lessors are very smart. They know what they're doing. So they like to have those analyses in front of them when they're making those decisions. Same goes with the banks.
Are you factoring environmental trends into your forecast? That is the next question.
So at the end, our base value forecast is very much looking at historical market values. Moving forward, we strip out the effects of the market to get a linear depreciation curve. So yes, we very much do look at historical values. And one of the projects that we've got going on at the moment is just to do the regression analysis, seeing we've just been through this really deep downturn. One of the reasons it's taken us a little bit of time is because we were waiting for the upturn, but it's quite clear that we are where we are, and we're going to do an analysis on that. So our forecast does take historical analysis into consideration. In terms of what's moving forward, market fluctuations doesn't play a massive role in our base value forecast, but of course we look at what's ahead, what's the market likely to be moving forward, and now maybe even more complex than we have ever done them before, because I'm pretty confident that the market in which the aircraft operate is a huge I completely lost my word. Can I go to Swedish now?
Environmental.
It's a huge influence on the actual value for that particular aircraft.
I think there was a last question, if I recall. Can you show the right? No, this one is addressed. Okay, fine. Okay, that's it. Well, maybe there was a very interesting question that you must have added, Al.
It's coming back. This wasn't me.
Okay. Yes. Yes or no?
Who's it for?
Oh yeah. Oh yes, great. So now we stick to reality.
It's divided.
Stick to reality.
Appraisals reflect reality. Ed. Now you know that appraisals reflect reality. Well, I think time's right. Thank you very much for all the panelists. I'd like to thank all the panelists for all their explanations. Thank you.